Have you ever wondered why crypto always seems to go down whenever there's good news about crypto or the economy? Last week, for instance, when Trump was inaugurated, he kept every one of his crypto campaign promises. From a strategic crypto reserve, check. Pardon Ross Ulbricht, check. A new crypto regulatory framework, check. And yet the crypto market still tanked. Well, it may or may not surprise you to hear that what's actually happening is every crypto exchange is using these major news events to manipulate the price of the top cryptocurrencies to try to get you to panic sell your tokens. But the good news is I'll show you how you can use this manipulation to your advantage so you can time your crypto purchases to buy your favorite cryptos at low prices. But also remember, this is not financial advice. So what exactly are these exchanges up to? Well, many of you may have heard of perpetual futures trading, also known as perp trading, where you can bet big on the price movements of cryptos up to 200x leverage. And that's a ton of leverage. Now, exchanges in the business of making money, they can't afford to pay out a bunch of 50x, 100x, or even 200x bets. They would be out of business so fast if they did. So they need to liquidate all these high leverage traders. So what these exchanges will do is wait for a major news event and initiate a market sell order for a small amount of the tokens they hold. Now remember, they have huge bags and crypto market is notoriously illiquid, so it doesn't take a lot for them to manipulate the price. It's also illegal for them to directly sell in their order book. So what they do is they send the tokens to a market maker to do the selling on their behalf. They have recently been using the market maker Wintermute to drive prices down. It's all on chain and available in real time, so you can actually see it when they're doing it. Here's a screenshot from the flush they did earlier this week, where you can see Binance, Bybit, and Coinbase are all sending Bitcoin, Solana, and Ethereum to the market maker to be sold in large batches. The sell order is sent to Wintermute, and then they tanks the price of the token they're selling, which will cause 100x traders to be liquidated, which will then cause a market order for their leverage positions, which will take the price more, causing the 50x traders to be liquidated, and the same for the 25x traders, and then sometimes it goes down to the 10x traders and even the 5x traders. This is often what is called cascading liquidations. They only have to do this with a small amount of tokens, and the rest of the crypto market will follow along with it. Then the degen altcoin holders will be sitting there down 50% on the day, wondering what the heck happened. Now, as you'll learn, price action makes the narrative. So if you go on X, you'll see all the bears claiming that the sky is falling, the bull market is over, and everything's going to zero, which scares people into selling at the bottom. Then once enough people have capitulated, the exchanges will buy back the tokens that they sold at a discount and wait for everyone to get bullish again and repeat this process over again. Pretty crazy, huh? The market manipulation is nothing new. It happens in every trading market, from stocks to Forex to commodities to the gold market, you name it. Now, market manipulation is also illegal to do, but regulators always seem to turn a blind eye to these type of things, which is really unfortunate for us. Now, the crypto exchanges have been doing this pretty much every week for the last 3 months as people become more and more bullish on the prospects of crypto with the new Trump administration. But the good news, it is becoming apparent that they can't manipulate the price of Bitcoin as easily as they had done in the past. That's because there's a growing demand for Bitcoin from these Bitcoin ETFs, talks of new state and nation Bitcoin reserves, and then corporate treasuries popping up such as MicroStrategy, or all gobbling up as much Bitcoin as they can. I think when this bull market does end, we could see several major crypto exchanges go under due to mismanagement and failure to properly reserve their positions. What's the Warren Buffett quote? Only when the tide goes out do you learn who's been swimming naked. Next, let me show you a visual of how these liquidation levels work and how you can use this manipulation to your advantage. While you're at it, hit that like button for me if you're finding this content helpful. So let's pull up TradingView. Now, TradingView is a great resource if you're an active trader in stocks or crypto. For this example, we'll look at Solana since it has been ripe for manipulation lately. It's been one of the best performing cryptos over this last 2 years of this bull market. So first, we will pull up the liquidation levels indicator. So to do this, we'll search liquidation levels by Leviathan. So here, this shows the different liquidation levels currently on Solana on their 5-minute chart. The red lines are the 100x traders, the orange ones are the 50x traders, and then the blue lines are the 25x traders. So you can see based on this, currently the high liquidation points, it looks like the 214 to 220 range is really where I think they're going to try to pull the price down to liquidate those 100x traders that are congregated there around 214, 215. We can also see they're really dumping Solana here this afternoon as well. We got some high volume sells, so I think they're really trying to actively push down the price currently. So we should potentially see that 214 area here in the next couple hours. But by the time this video is out, that'll probably be resolved. So if we think about this process big picture, if everyone's bullish on a crypto and there's tons of people entering leverage long positions, the exchanges are highly incentivized to flush the price down to wipe out those long traders. Likewise, if a crypto is widely disliked, let's say it's highly centralized and supports CBDCs, or maybe it's one that has no active users and a somewhat crazy founder, oh man, I might get some hate for those comments.
I don't care.
Traders are more likely to enter short positions on those types of cryptos, so exchanges will be incentivized to hike the price up to liquidate those shorts. Now, if you don't have TradingView, Marty Party on X gives updates on the liquidation levels for most of the major cryptos, and he updates them several times a day. Here's a chart he posted recently, which makes it very clear visually. You put your limit long orders at the liquidation levels and wait for the price to come down to that level. I've really found this to be a great data point for me to get into positions at attractive prices, and it avoids me from buying high and selling low. I've actually caught the exact lows on several dips in Bitcoin and Solana over the last few months by putting limited orders in at Marty's liquidation levels. Credit Marty Party for constantly keeping people informed about this manipulation issue. That's where I got the idea for this video. Give him a follow on X. He delivers some great alpha and that he shares there. I've been dabbling with using Jupiter's website to perp trade Solana and Bitcoin over the past several months, and I've had some good success with it, so I want to show you that website real quick. So the website is jupe.ag/perps. You can perp trade Solana, Ethereum, and wrap Bitcoin on here directly from your Phantom wallet. I have some very strict rules I follow to avoid overexposure, and liquidation on this website. First, I never risk more than 5% of my trading account for any trades. That way, if I do end up getting liquidated, it's not the end of the world for me. Second, I never use more than 5x leverage. Any more than that, and they will hunt your liquidation level. You can see here, they offer up to 100x leverage, which you can see if we are entering right now at 230.88, they get liquidated at 229 and change there, so $1.50 lower than the current price, which is very likely that they would liquidate you if you're to go that high. So never more than 5x, just for safety here. And then third, I don't keep trades on for more than 1 month. Otherwise, the fees on this website will really eat into your profits. So they have an open and close fee of 0.06%. For each trade you make, and then you have a borrowing rate also for as long as you have the trade open. So for Solana, the borrowing rate is 0.0039% per hour. For Ethereum, I believe it's less for Ethereum, 0.0018, and then Bitcoin is also 0.0018. So you can see due to the high demand for Solana, you're going to have to pay a higher interest rate to have a perp on for Solana, just because I think of the popularity of trading the network currently. Now, this website also just initiated limit orders. So in the past, it was only market orders available. So a limit order allows you to, put that limit order in at the liquidation level and wait for the price to drop to that level. You also have the ability to do stop losses and take profits as well when you have an open position to help you manage the risk associated with position. One other thing I should mention with this website is Jupiter just did have a big airdrop last week. So if you've been using this website, you may be eligible for an airdrop if you've been using it over the last several months or last year. I'll link their airdrop checker in the description below so you can check to see if you're eligible for that Jupiter airdrop. Now, following these rules, I haven't had any liquidations of any of my positions yet, but I have also had some very close calls so far. So if you don't want to take on the risk of perp trading, don't use leverage and just put in limit orders in to spot buy at the low liquidation levels, which makes for great low risk entries in my opinion. Then move all of your crypto that you purchase into a cold storage wallet. If you don't yet have a cold storage wallet, watch this video over here. Thanks for watching. Bye.